So, you want to be a homeowner this year? Fantastic. Here are the top three things you need to do to make sure that dream becomes a reality this year. Hey, this is Adam McAllister with McAllister Myers and Associates, here to bring you the top three things you need to do to become a homeowner this year. This is YouTube. There are three buttons down below. You know what to do. Keep up to date. More information coming your way. All right. So, what are the top three things you need to do to become a homeowner this year? Let's begin with number one, and that is to devise a budget. Figure out how much home you can afford each month. Now, this doesn't go to the total amount of home, the total home purchase, but how much mortgage payment can you afford each month comfortably? The key word here is comfortably. You don't want to be house poor eating macaroni and cheese and ramen for the next 30 years. So, what is a comfortable monthly budget for your mortgage payment? Now, if you're renting, you make a rent payment and probably some utilities. Now, when you pay a mortgage, you're actually making four payments in one. You are paying your principal, you're paying your interest, you're paying your taxes, and you are also paying your homeowner's insurance. And if you live in an HOA, you may or may not be paying an HOA fee as part of your monthly mortgage payment. So let's work down all through those. So the first one is your principal. That's your main loan amount. So you're going to be making a loan payment every single month on the principal. And again, breaking things down, number two is your interest. So whatever your interest rate is, you are making that interest payment as well as part of your mortgage payment. Now, down the road, if you were to refi, that APR or that interest rate will change and therefore, hopefully, lowering your monthly mortgage payment. Number three, taxes. Another big part of your mortgage payment are your taxes. Now, depending on where you live, will depend on how much of your mortgage payment this actually makes up. We are located here in Pennsylvania, PA, and taxes are a big part. You have school taxes, county taxes, and local taxes. All three taxes go into that monthly mortgage payment. Finally, is insurance, your homeowner's insurance. And I know somebody just went, wait a minute, you said you're in Pennsylvania, yet you have a California flag here. Yes, I do. And I'll explain that down the road if you're good. All right. And finally, like I said, your homeowner's insurance. So your homeowner's insurance payment also is part of that monthly mortgage payment. So again, how much home can you afford each month? Keeping in mind you have four payments into one. Now, if you're renting, typically your rent payment in most areas is anywhere from $100 to $300 and depending more over what a monthly mortgage payment would be. So if you're renting right now, chances are pretty high you can afford a mortgage and you can afford to buy a house. That is, unless, of course, you're renting a $350 back seat of a Ford Pinto. Not throwing any shame in the Ford Pinto crew, just saying if your monthly payment is $350, it's going to be pretty tough to find a house payment for that low. Not saying they're not out there, just saying it's going to be pretty tough. All right. So, number one, we've established a budget. Number two, we're going to meet with a local mortgage lender. That could be at a local bank. It could be at a local credit union. Could be a local mortgage broker, someone who's local to your area and not just working off the internet. There are three main reasons why. One is going to be accountability. This is a person who's going to be sharing some of your most secret and private financial information with. You want to make sure you can trust them. And number two, you want to make sure they have a high level of accountability because at the 11th hour, if things go sideways, you need the ability to meet with them face to face and not be stuck hoping for a phone call or email from who knows where, from who knows what state, from who knows what country. So the level of accountability is much, much higher when you're dealing with a local mortgage rep. Number two is going to be familiarity and knowledge. They're going to know way more of the programs that are in your local area. As I mentioned, I live here in Pennsylvania. We service the Pennsylvania area, and therefore there are certain mortgage programs that are specific to PA. Now, if you live in Nevada, Maryland, Utah, Texas, wherever, they probably have state programs that are focused purely on that state that an average internet lender is not going to be familiar with. So that is why also going with an experienced local lender is going to be to your advantage. Definitely getting your finances in place is one of the most intense things you're going to do. But by doing so, it's going to simplify the home buying process and save you a bunch of headaches. Number three, and this is the most important part, and that is they're going to be able to provide you with a pre approval letter or pre qualification letter. They are two different types, but they both will give you the same thing, which is the paperwork necessary in order to put an offer on a home. Now, what are the differences? A pre qualification just simply says that you answered the questions that they gave you correctly. And up until more verification will be done down the road, they can legitimately say you can get approved or you can purchase a home. Now, a pre approval, on the other hand, is a much more intense version. They're going to verify your credit score, your debt to income ratio. They're going to verify the income that you make every single month. They're going to verify your employer. It's going to be a little bit more legwork, but that letter is going to mean a whole lot more and make you a stronger buyer. So the difference between a pre-qualification and a pre-approval is definitely what you are looking for because it will give you more strength and more leverage as a home buyer. Now, obviously, this step doesn't apply if you're paying cash. If you've got the ability to pay cash, fantastic. You are in great shape. However, for 95% of the first time home buying public, getting this step done and meeting with a local mortgage rep is going to be paramount to you getting a new home. And now we are ready for number three, which is meeting and interviewing several agents. Don't just go with the first agent that picks up the phone, unless, of course, it's me. You want to talk with someone that you actually gel with. Keep in mind, just like the mortgage officer, your realtor, your buyer's agent, you're going to be sharing a lot of information. You're also going to be spending a ton of time together and going over information. They're going to be able to help guide you through different things. And just because someone has a real estate license doesn't mean they're the same across the board. It is not a level playing field, just like there is not a level playing field with clients. So, therefore, interview the agents that you want to work with and pick out the one that you get along best with, that you trust the most, that you have the same feelings about, because you're going to spend a ton of time. You're going to be having a ton of conversations with them, and you're going to be getting relatively close. I have clients that have become close friends, almost family, with the amount of time that we've spent together. So, interviewing the agents and getting to find one that you trust, that you go, yep, I know they're going to be looking out for me. They know their stuff, and they're going to be able to guide me through the home buying process is also going to be in your highly best interest. So, number one, come up with a budget. Number two, speak with and get familiar with your local mortgage officer. And number three, interview and choose the right real estate agent for you. After that, the fun can begin. Shopping for homes, putting searches together, getting out and seeing showings, and of course, some therapeutic beverages. So we'll get into more of that down the road. But for now, I wish you luck. And if you have more questions, feel free to leave a comment down below. And I'll see you next time right here with McAllister Myers and Associates.